Hey everybody, I hope everyone is doing well and had a good day. In this video, I will review the Emini 5-minute chart for Friday, August 22nd, 2025. We had a gap up going into the day. As usual, I like to look at the Globex 15-minute chart going into the day, especially when there's a gap. When there's no gap or a small gap, you can assume that it's a trading range or night, but here I like to see the approach of the gap into the morning. So here's yesterday's close. We had a trading range with a bear breakout attempt. It looks like it's a late leg, maybe 1, 2, 3 legs down, late in a broad bear channel. Then we got a strong reversal up, breaking above the trend line. Maybe the trend line is here, maybe it's here. But the spike is really strong, and the odds are this is going to get a second leg up. And the pullback is also strong because it's a sideways pullback. You can see it pulled back. It's a really shallow pullback relative to the size of the spike. It's more sideways than down. Like back here, we had a spike down, but the pullback was deep and it was sideways to up. This is more sideways rather than down, so it's a really shallow pullback. It's a sense of urgency. There's a lot of demand from this bull breakout. Trapped traders below, desperately looking to buy. And going into the day, we have a high 1, high 2, high 3 buy setup. I have yesterday's high marked in blue. Most days break out above or below the prior day's high or low. And the prior day's high usually is resistance until there's a breakout above, and then it becomes support. So in this case, we gapped up. We know there's a strong rally, likely to get a second leg. We're probably going to go above, at least one tick above yesterday's high. But trading range bar on bar 1, probably buyers below and sellers above at resistance. But then look at bar 2, a really strong bull trend bar, closing on its high, closing above yesterday's high. Traders who sold above bar 1 or sold at yesterday's high are now trapped by bar 2. And then bar 2 got really strong follow through on bar 3. So a really strong breakout and follow through for the bulls. Second leg up likely. If there was, the traders selling at yesterday's high, which was expected to be resistance, the top of a trading range, this now becomes support. The traders who sold above 1 sold the high. They're trapped into a losing position. 2 and 3 uniform in size, so similar sized bars, closing on their highs, big micro gaps. And there's a very high probability that this bull breakout gets a second leg, which means the first pullback is likely to be minor. So bulls will buy. They'll buy the close, they'll buy a pullback, they'll buy below bar 4, they'll buy for any reason. Because the odds are we'll get a second leg up. The problem for the bulls is the stop is far. If you're buying closes, stop maybe below 1 or 2. So your stop is far, but your probability is high. High probability always comes with bad risk reward. For more overlap with the prior bar, it's a trading range bar. On a smaller time frame, it's a spike and pullback in a channel, and the spike is getting weaker. There might be sellers above 4, but again, any reversal attempt is very likely to be minor. This is a strong rally with trapped traders below, and there's support below bull bars, there's support at yesterday's high. We're probably going to get a second leg up. Inside bar on 5, so it's a non-breakout bar. So even though the bar looks pretty decent for the bears, it's relatively small compared to 2 and 3, and it's an inside bar, so it's a trading range bar. Probably buyers below 4, buyers below 5 and 4. And then 6, bear breakout testing yesterday's high again. Is 6 a solid close bar? Is 6 going to get a second leg down? It might, but remember, this was a pullback on the smaller time frame. We rallied, we pulled back, then we continued to rally. This was a reversal attempt, and the attempt could be counted as a leg. And so the problem with bar 6 here, it might be a second leg trap, where the first leg down was the tail on 4, and the second leg down was 6. We know we're testing support. Think about if you sold for any reason above 1, the high of yesterday, and then you got 2 and 3 against you. If you sold, you're trapped into a losing position, and you're probably just looking to get out at break even if you're given the opportunity. And that's where bar 6 is testing. So 6 might simply be a vacuum test of support. And again, this is still likely to get a second leg up. If we factor in the gap, the rally started, this was a micro channel all the way from 78. So this is still not quite a 50% pullback of the bull spike. To me, it's incorrect to measure from bar 1 to bar 4 because the spike really started down here. There were no pullbacks, and the gap can be looked at as simply a bull trend bar. So it's kind of misleading if you measure from the low of 1 to the high of 4. You think it looks like a deeper than 50% pullback, but in reality, it's probably more like that. So we're still above the 50% pullback of the entire bull spike. 6 is a good looking bar, but it's a higher low. You look to the left, and the context is we have a pretty strong rally that has not had a second leg. The reality is this might need a second leg down, but even if it does get a second leg, it's probably minor. And then big surprise on bar 7. The problem with bar 7, well, it's a huge bull breakout bar, closing far above all the bars to the left. Very likely to get a second leg up. If you buy the close 7 and you're willing to scale in, you're probably going to make money. But bar 7, it's a 57-point bar, which is about the average daily range of the recent days. So the problem here is 7 makes today almost basically an average daily range in size, which means there might not be much left to the upside here. 7 might be a vacuum test of resistance. I don't have it drawn, but you can see on the daily chart on the left that the market is vacuuming up to the top of a trading range. There was a tight trading range here, bear breakout, 50% pullback of the rally, and now we're testing back to the highs. There's resistance up here. So the point with that is that there might be resistance, and the upside or the range of the day might be limited at this point. So the expectation really, bar 7 is a very climactic bar. It could be the start of a bull trend, but to me, I think it's more likely it's more trading range behavior. And when you get such a big bar or a spike on the open like this, it usually leads to a trading range sideways for the rest of the day. There's only a 20% chance you get a bull trend for the rest of the day, and a 20% chance you get a major bear reversal. So 60% of the time, the expectation is sideways. But 7 does need a second piece, so no reason to sell. Risk is big for the bulls. Follow through buying on bar 8. Bulls will buy, they'll buy closes, they'll buy below bars, betting that the first reversal will be minor. They'll buy below bar 9. You see bull bars getting smaller, 7, 8, 9, so we may pull back, but the first pullback is probably a minor reversal. When we do get a pullback, so we have bar 10, bear, reversal bar. It's a good looking reversal bar, and it's one of those bars that reminds me of the video course where Al talks about this being a common trap for beginners because beginners only think about risk. The problem is that there are 3 variables to the trader's equation. You got risk, reward, and probability. But a beginner only thinks, they worked hard to build up their trading account and they don't want to blow up their account and they're just focused on risk. So they're looking for trades with small risk. And if you're going to take trades with small risk, you need big reward, so good risk reward profile. But that always comes with low probability. That's what bar 10 reminds me of. It's a good looking signal bar for the bears, but the context is really bad. Strong bull breakout, second leg likely. First reversal probably will be minor. So what bulls will do when they see bar 10, they'll buy below the bar, or buy the close of the bar, and maybe put a stop and measured move down, maybe a little further, maybe 2 times the size of the bar, betting that the bears will not reach the measured move targets and will get a second leg up before there's a major reversal. So 10's a low probability sell. There's probably buyers below 10, buyers below 9, buyers below 8, and then a bad follow-through bar. High one buy for the bulls after a strong bull breakout. Hard to justify selling because it's not clear that this is the top of a trading range. You can sell above you can sell above a high one at the top of a trading range, but it looks like the market's trending. We have all the bars above the EMA, trend bars, and we're far above the moving average, getting higher highs, higher lows, open gaps. So probably not wise to sell above 11, but there are probably profit-taking bulls above bar 10, resistance above 10, because after you get the pullback, it's a spike, and the spike ends once you get a spike break, a pullback, when bar 11 goes below bar 10. At this point, there's either a bear reversal underway, or the market's entering the channel phase. We got the spike, pullback, and now we're in the channel phase. So we can remember the start of the pullback, or the first pullback, is the start of a channel, and the channel usually evolves into a trading range. Trading range bar on 12, but still a minor reversal. As far as selling, is it a low 2 below 12? Bears will look at it as a low 2, low 1 below 10, low 2, 12 signal bar, but it's a weak signal bar and the context is bad. It's probably buyers below 12 and probably buyers on the close of 12. Bull breakout bar, very likely we go to at least a new high, so there's a high probability scalp here. 14, a bad low 2, it's a double top, but small signal bar and still bad context. Looks like a minor reversal. For a major reversal, where's the significant trendline break and the big consecutive strong bear bars? They don't exist. So also okay to buy the close 14, buy below 14, betting we at least get to a new high. And 15 breaking out to a new high. We have a rally, pause, rally, so a couple of pushes, but it's all a tight channel. It's a micro channel. So this breakout is probably going to get a second leg, which means the first reversal should be minor. So there's probably buyers below 15. Traders can buy the close 15 and scale in. 16, another weak sell setup. Higher high double top, but small signal bar and still bad context. Some traders see it as a wedge, 1, 2, 3, but it's too tight. Like I said, it's a micro channel. There's open gaps, very little selling pressure. Not good for selling, which means it's good for buying. So buyers below. High one buy and still very little selling pressure. Always in long, okay to be long. But because we're at a new high, we will find profit taking here. We'll probably find profit taking above 16 as well. I'm going to speed it up here. Now we have several pushes up, 3 or 4 pushes up, spike and tight channel. Remember I said we might have to come back and test the start of the channel, often becomes the bottom of the trading range. And we're far above the moving average. As we start to go sideways, we saw it happen here on the daily chart. We got 1, 2, 3, 4, 5, 6 bars sideways, far above the moving average. At a certain point, the bulls conclude that this is not enough momentum to justify buying up here, so they're going to reduce their risk and they'll take profits. And bears will start selling. They have a good risk-reward profile. They got room to the moving average. And if this channel is to evolve into a trading range, they've got plenty of room to make a profit. So 21 is a safe bar to exit longs below. 20 as well. You could exit longs below 20, below 21. And bears, they might start selling. But it is a counter trend trade, so probably good for scalps. Continuing in this tight trading range, probably sellers above and buyers below. We broke out to a new high, but the channel phase we find profit taking at new highs. So 25 broke out to a new high, but it's now several bars into the channel. We're testing the highs, so we're expecting selling up here. So another bar to exit longs below, 26. And finally drifting more sideways, 3-bar micro channel, second leg down likely, probably sellers above 30, probably at least get to the moving average. We tested it on bar 34. Now we have several legs down, another 3-bar micro channel. We might need one more leg down, and we may not get all the way back down to the 11 low, but maybe the bad stop order signal bar 11 high is a more realistic target. It also might already be 3 legs down, 1 or 1, 2, 3. So dangerous to be selling here, especially when it's counter trend and you're getting 3 legs against the trend direction. So this, even though it might get a second leg, might be better to step aside if you're looking to buy. Let the bears get their second piece and then look to buy. But probably sellers above 34, not a very good stop order signal bar. Implied pullback, second leg down, but probably buyers below 34. And then finally a stop order buy 37, reasonable to exit shorts above 37 and bulls can buy. And then the bears ended up getting their one more leg down. So another stop order buy 42, not great, 43 better, a strong breakout bar in the direction of the trend. Micro channel, second leg up likely, but we're testing what would be the top of the trading range at this point. We've gone sideways enough that it looks like the market's in a trading range at this point. From this higher low, we had more than a 50% pullback. Probably sellers at a new high. And we came close, but then began to reverse down again. I've got to speed it up here. Another 3-push pattern here, 1 or 1, 2, 3. The problem is that it's a micro channel, so the channel is tight. Even though it's a wedge, it's minor. The expectation is a minor reversal and then another leg down, and that's exactly what we got. We got a 2-legged pullback, 1, pullback, 2, and then the bears got another leg down. And what happened here? We tested the bad stop order buy 42 high, and it looks like we got a measured move down of the wedge. All right, that's going to be it for today's review. Thanks everybody for watching, and I hope everybody has a great weekend.